Hey, good morning, everybody. Trendy John here from Simpler Trading. Hopefully, everybody is having a wonderful weekend and you're ready to get back in the chair tomorrow. We'll be covering this week's major U.S. economic reports and Fed speakers and all the levels that I like to use to get us ready for the week ahead. This week, we are looking at the 17th through the 21st. And yes, we do have to work tomorrow, right? Even though it's St. Patrick's Day. So please be there 30 minutes before the open to get the morning scoop. Let's go ahead and start. And as you all know, I'm a professional supply and demand trader. Melissa and I are the moderators here in the Trendy Trading Room. And not only do we have the Trendy Trading Room, we also have the SPX Alerts Only Room. Before I get started, please just take a moment, go ahead and hit that like button. I really appreciate it. And let's go ahead and get started. So, this week's major U.S. economic reports and Fed speakers. Why is this so important? Because it's simply we just need to understand what time these events are coming out. We do not sit on our hands. We look at this as a catalyst that pushes price to supply and demand. And when price gets to those levels, that's when we execute. Monday, March 17th, looking at U.S. retail sales. Moving on down, we also have some business inventories and home builder confidence index. These are in Eastern time. Tuesday, March 18th, housing starts, building permits, import price index, industrial production capacity utilization. Wednesday, FOMC interest rate decision. Big day right here. That could mean that Monday and Tuesday are pretty choppy and just getting range bound before the major event. And then right after, we have Fed Chair Powell press conference, so the presser right afterwards. Thursday, initial jobless claims. Then moving into existing home sales, U.S. leading economic indicators at 10. And then Friday, nothing scheduled. So again, it really just looks like, Monday and Tuesday could be a lead up into the bigger event, which is the FOMC and Fed Chair Powell. Let's go ahead and move into this week's earning whispers. This is what I use for when I go out on X. I love to use these guys for this information. Really straightforward. I take a look at the calendar. Again, these are just catalysts that push price into supply and demand. So my idea is to look for names that I really enjoy trading and make note of that, identify the levels, and if I see something that looks like we'll have a bigger than expected move, then I will also trade these into earnings. Matter of fact, one of my classes this year, earlier, just in a couple months, we'll be looking at how to trade into earnings. And it is in time right before next earnings season really kicks off. So, what do I see on here? For me personally, the bigger names are going to be Micron and then Nike. All right. And for me, I actually hold NKE for leap trades. So what I'll be looking at is a demand zone to the downside, and I'll look at hedging my long-term trade. Okay. So again, Nike and MU are probably the biggest names on here that I am watching. And then there's FedEx, of course. I like this one as well. Let's go ahead and move on to our next section here, and that's going to be SPY. And I like to use TradingView for the bigger picture. This is going to be a quarterly candle. That means every candle on this chart is representing one quarter. You'll notice over here that we have a countdown timer that basically lets us know that we have 15 days and 7 hours until this candle closes. This is really important because a lot of what we do here in the supply and demand room is that we are looking at structure. And as of right now, this quarterly candle is not an inside candle. And you guys understand why that's a big deal. So my overall gut tells me that most likely what will end up happening here is there's a possibility we could end up closing out the quarter above that 572. Just take your line, go up underneath last quarter's body, and this is going to be that level. However, I also don't see it getting over 585. Okay. One important thing you're going to know about this chart, well, a couple important things, I'll go over them, is that price finally made it into the 23.6. Basically, what I've done here is if we click here, I'll freeze this. You'll notice where I placed or anchored the Fibonacci. So again, from this rally here all the way into this high, and this is our 23 and 38.2. This was the bigger picture for the bull channel. We've come back to the 23.6, and if I open this up, you could see that we're trying to hold that 562.44 level, and here we are at 562.81, so just a tad bit below it. Bulls, the first step that I'd like to see on this bigger chart is that we can get above that level first, okay? There is the possibility that this relief rally, and I'll tell you why it's a relief rally here shortly, but because it's a relief rally, there is a possibility that prices can move all the way down into 533 and look to be testing this 9 EMA that's on the quarterly chart. Speaking of the 9 EMA, this is so important. You'll notice since many years, that price has held this 9 EMA, and every time it's come back here, it's been a great place for long-term investment. All right. So again, as a reminder, if prices get down towards these clouds on the quarterly chart, I am definitely interested, at least for myself, getting long. Now, again, I do have a 401, and the timing has been great because my initial buys are coming in on the dip. I'd much rather those buys coming in on the dip than buying here at the top. But just again, please understand that we can pull a lot deeper into obviously this cloud, but also there is a zone down here around 462. So let's just read these simple notes. I like to put simple notes on here. There's no reason to overanalyze this idea. 4 weeks down and a rally on Friday. From the primary 618 measured from August to February, and I'll show you this here in a second, measuring the high in February to the March low, the bounce is still in the extreme bear channel, meaning underneath the 23.6, the two major levels for this week are the golden pocket and the 618. A lot of information, and let me go back over that so that you understand. This is the SPY using Thinkorswim. This is where I execute. You'll notice here that we are 4 weeks down. 1, 2, 3, 4, and we had this really nice rally that came in on Friday. Couple things about that. Let's talk about the primary Fibonacci's. The primary Fibonacci, you'll notice that I brought up August to the high in February. That is where these are anchored, okay? And looking at this rally, you guys can see that price pulled all the way back to the 618, which is a really big deal. The 618 is called the golden Fibonacci. It also was lined up with a zone on a lower time frame, and it worked really well for a bounce. However, looking at the secondary Fibonacci's, you'll notice that I anchored my fibs here again at the high and then with the low that came in on Friday. The push to the upside, bulls need to see above the bear channel, which is going to be 23.6 and 38.2. Again, one of my other classes that I'll be teaching this year is going to be strictly on Fibonacci, and I hope you guys are there because it's really important when we look at analyzing the overall trend and direction and what we expect. Notice that the bounce, although beautiful, still closed underneath the 23.6. This is a really big deal. Now, the golden pocket is something that's made up of the 50 and the 618. Notice that the golden pocket is up here around 582 by around 589. Basically, the golden Fibonacci or the golden pocket here would be an area, if we got an exuberant move to the upside, would be an area that I would be possibly looking at getting short again. And most likely, if price were to bounce this hard into this area, this is where a lot of traders, especially retail traders, would be thinking of the idea, or actually maybe not even thinking about the idea, but forgetting about the overall move to the downside. Again, I would much rather be looking to get short when prices are moving up versus when prices are moving down. So if I get the opportunity, this is where I personally would try another short. Bulls, let's just talk about a couple levels. Again, we need to get above the 23.6, which is 565 and a half. Over 38.2, big deal. We get back out of the bear channel. If you guys know nothing about what's called a relief rally on my YouTube channel, if you just search relief bounce, you're going to see exactly how I teach that process. Please watch that very quick video. I think it's about 3 to 5 minutes long, and it really gives you some awesome insight on how to approach these type of big moves when the market is overall pulling back. My two major levels are going to be that golden pocket because obviously this would be a really big level. And then my next major level is going to be the 618 again. So basically the low, but notice that I had this green zone in here. So we really just need to see this entire area hold. And again, we are 4 weeks down. And when we go back and look at history, it's very uncommon that the SPY is down 4+ weeks. It's more common to see 2 to 3 weeks, so there could be a possibility that we get a sustained bounce, but just know that your major levels for this week. All right, let's go ahead and move on. Now we're going to move into the bigger picture, looking at the cues. And as you can guess, it's pretty much the same. We got this really ugly quarterly candle so far. We got a 9 EMA that's still underneath here. We have pulled back to the bull channel of the area that I have measured. Let's go ahead and freeze this. You can see that I've anchored from this candle here all the way up into the high. And if we apply those Fibonacci's from here to here, we have pulled back into the bull channel. A little bit different than the SPY, as this has led a little bit deeper into the bull channel, and that's okay. What you're going to notice is price is trying to hold the 38.2, which is 463.39, and you can see we closed at 479.66. Let's go ahead and go over the notes. Well, before we do that, once again, showing you the importance of the 9 EMA on the quarterly candle. This has been a really nice area to get long for many, many years. And when I said many years before, we're talking about all the way back into around 2009, 2010. Okay, so it's very uncommon that price goes underneath this. Matter of fact, if that ever happened, you can imagine a lot of traders would be really, really fearful. And you think that the fear and greed right now is extreme fear. Imagine if we were to get a dip down into or around this demand zone in here. Okay, but we do need to be aware of it. Let's talk about the notes really quick and then we'll go to Thinkorswim. Price rallied off the yearly mid edge. I'll show you that here in a second. Also associated with the golden fib measured from the August rally to the February high. After Friday's rally, price is still under the bearish channel. The two major levels this week are the 618 and the golden pocket. I'll show you that here. 468 by 504. Let's go ahead and move this out of the way. Let's go ahead and pull up the cues. And once again, guys, just a few seconds, please. Please subscribe to this YouTube channel and go ahead and hit the like. On the cues, you can see there's the same thing. 1, 2, 3, 4 weeks down. Just so happens, once we take the primary Fibonacci and we anchor it from the rally in August all the way into the high of February, here you can see that once again we pull back to the 618. Now, also underneath there, it's hard to see, but if you guys have the indicators, you'll notice that the trendy mid-yearly edge is on the QQQ chart and it held very nicely. But on the secondary where we're anchoring, and again, we go up to the high and anchor here and take the low, you'll notice that the 23.6 and the 38.2 are here. That means even though we had this beautiful rally on Friday, that prices still stayed underneath the 618, or sorry, the 23.6 and 38.2. So please, please note that. And a lot like the SPY, I have a golden pocket, which once again, if prices were to move back up here, I believe a lot of traders would find a lot of euphoria and forget about the whole entire down move and start. This is where you start to hear people say a lot of crazy stuff like, hey, we're going to hit the highs within a week or something. You know, people just get super bullish. And for me, though, personally, it doesn't mean that I'm going to obviously full port into the put idea because by nature I am a bull. But right in this area is where I'd be looking at trying to put a short on again. Okay. If we were to get up there. So once again, my two major levels, the golden pocket, which comes in around 504, and then moving down here towards the 468 level is going to be those two. Note, if for some reason, if we break down underneath here, then I have a zone that's further down around 452. If I were going to set up some alerts, it's really easy on Thinkorswim. I just come up underneath this low here, right click, create alert, make sure that it says at or below. And that way, you know, if you're out and about doing something and we break that, then there is a possibility we head back down towards 452. And then up here, I want to be a little bit before it so I can get ready. I create an alert at or above. This is 50214. Let's go ahead and create that. Once again, my two major levels, I alert them, I have them on my charts, and I understand what I want to do when price gets there. Everything between, I wouldn't say is noise because it's really a lot of range and we could still trade between those levels. Okay. Let's go ahead and now move on. We're going to move into the bigger picture, I guess, looking at the DXY or the dollar. Now, it's not like the quarterly, so it's DXY. I'm going over to a weekly chart. And the reason why this is important for me, typically when the market is, or sorry, the dollar is rallying out of a demand zone, there is a potential that the market pulls back. Okay. And again, the dollar associated with supply and demand works really well when trying to look at um, your ideas of where the market is going to move. Again, supply and demand is my go to for everything. So, again, in a demand zone, we're looking for the dollar to actually bounce. And in supply zones, like up here, we're looking for the dollar to break down. This is really important, again, understanding the direction of the market. Now, notice we have two major zones supply here that's worked very well, and a demand zone that's worked really well every time prices come back. So, these are going to be the two major levels, and you can see that we're between them, but we're actually lower on the curve. What do I mean by that? When I say lower on the curve, I just simply mean that price is closer to the demand zone, which means that there should be a yellow flag in the back of your head that possibly the dollar is getting ready to bounce a little bit. And again, I'm thinking if the dollar bounces a little bit, especially after a 100 plus point day up in the S&P futures, that there could be some sort of pullback if this dollar starts to bounce from this demand zone. Now, if you just want a little bit of peace and a little bit of quiet, my two major levels are down here at 101.43 and then up here towards the 618. It would have to get above the 618 for me to really be concerned. So, going back to the idea that really at the end of the day, for me, the dollar is noise unless it breaks over this yellow level here or if it comes down here towards the demand zone where I would expect a bigger bounce. Okay. Let's go ahead and move on. We are now going to go into the 10-year, which is going to be the TNX. And my overall thought here is the same notes I've been saying for a while. The zones are working really well. I'm neutral for now. I believe technically I see this moving back towards 3.8 and below into June, July timeframe. For now, caution is warranted in the overall market for me if we see above 5.00. So once again, setting alerts up there probably towards 5. But again, as long as price is staying below this, or sorry, in between the inside and up and inside and down formations, supply and demand, then really all of this is just noise for me. Okay. Let's go ahead and move on. We're going to get into the skew. This is a really big one for this week, guys. Really, really big as far as my technical analysis goes. Finally, we got the pullback in the skew. One thing I've been preaching and talking about for, man, almost a year and a half, it feels like. Matter of fact, I take that back almost 2 years. We're in March. So we identified these zones a long time ago. Okay. And you'll notice I had to change things up, right? That's the whole thing is you have to adapt. And this worked for us for a very long time. Prices came down into this lower green area. This is where we're looking to buy calls 5 to 10 days out. We saw that probability suggests that we get some sort of, bounce in the market when that happens. Just as if this is your first time seeing this, basically, if you were to put a SPY chart behind these, and you can do that, you can add like another chart in the background. Anytime the skew is at these high levels, it means that the market is super euphoric. Okay, and what you'll see is that the SPY is trending really hard, and then it's not if, it's when. And then when they get up here, you'll notice we say protect, risk off, extreme buy puts 30 to 90 days out. It's not if, it's when. You'll notice that the SPY then breaks down, and that's what happened. Okay. Now we got to this level. A couple things I want to talk about on this level this week is that I bought my calls a little early, and I mentioned that last week. So they were a little underwater, and then I added at the bottom, and then I was able to trim on the bounce on Friday, which helped out a little bit. All right. Now here comes the big, what you need to understand. Ever since we found this zone and it's been working very well, price of the skew has never closed consecutively 2 weeks underneath this level. So if you go back and you look at these very closely, every time it's closed underneath, it's always bounced up really hard, which means boom, that euphoria, less fear, the market bounces back up, and 5 to 10 days out really pays you well. Now, look, it's really volatile out there, and it's hard to believe that after 100 plus points that will actually gap up again, but miracles do happen. So anything can happen. But all I'm telling you is this: it has been 2 years, 2 years since we've had 2 weeks closing underneath this level. Very big deal. And we have not hit the extreme levels that were very normal for many, 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 many years. We have not hit that level since right here. If we come back, we came into, let's just look at the last time we were actually sitting there. Comes around January of 2023. So again, almost 2 years here. Okay. Almost 2 years here. Pretty big deal. What I will tell you is if we get a lot more fear into the market and the skew drops even more, this is what we call extreme. So in this level, I go really small. I really do. Like this is a really small position, just using technical, see if I can get it. If I get down here, that's a little bit different. I'm going to go higher allocation, but I'm buying a lot more time. Okay. Again, smaller allocation, 5 to 10 days out, bigger allocation looking for 90 plus days out most likely. Okay. And this would be extreme, extreme fear in here, especially if this comes down very sharply. Okay. All right, guys. So that is the skew. And real quick before I move on, when I use it in traders, you can use it to adjust your portfolio. That's how I use it. If the skew is high, one might consider buying protective options or reducing, their exposure. Remember, while the skew is just a useful tool for gauging market sentiment and potential risk, it's one of many indicators for me, and it should not be used in isolation for making one trading decision. So again, the reason why I like the ID here was not just because it's under here, but also we were coming into an area where I was optimistic last week, and it did help on Friday. Okay. Let's go ahead and move on into our next indicator here, and that's going to be fear and greed index. So if you look at the fear and greed index, last week we're at 20. Pretty impressive that we bounced 100 and something points, and we're still extremely fearful. Now, technically, I'll tell you that makes a lot of sense for me because, as I said, even though we bounced 100 something points in the S&P, we didn't even get over the 23.6 of the drawdown. That's not a very good look. So again, bulls need to get above that 38.2 in order for me to feel a lot better. Let's go ahead and move on. Now we're going to look at the futures. Let's go ahead and use Thinkorswim here. I am still using the H25. Couple disclaimers. The H25 was the rollover contract for this month, and it doesn't have all the data that I'd want. So when I was teaching you all your futures class this last week, I said something really important. The reason why we need to understand when we have a contract rollover, and if we decide to use the contract rollover, it actually changes the formations and price because it's a different price. I chose to use this 3 months ago because I liked the way that the setup looked from a supply zone area. It made me think that we should be warned and that prices could move down. That's why I chose the H25. Also, keep in mind that the next contract rollover is soon. Okay, and it will be coming up. So there will be a change in prices, especially the deviation between SPX and the ES futures. You can always go back and check ES futures if you like. And again, the structure is going to look different. I will most likely go into the ES charts on the rollover, meaning just the ES. Notice right here, I have brought down the green zone. Okay, just a little bit, just in case this doesn't hold. This is our next zone down here below. Just like the SPY, I went ahead and identified from using this pivot to this pivot, looking at the 23 and 38.2. So if you guys just strictly trade futures, bulls, you need to at least get over 56.63 to get into the bear channel, and above 38.2, which is 57.60, is a really big deal as things look different. What I notice is that the correlation between big levels and looking at indicators, there is synergy. Meaning this cloud is resistance until proven otherwise, and so is this 38.2. And you can see right in that area, we have two things going on there. Just take note, please. Let's go ahead and move on into the daily. Now, I've been saying this is my favorite place to get long this year. Been saying that for a long time. We finally got there. We finally started to bounce. It doesn't mean that things are over to the downside. If you recall, my biggest thing for this entire year was I was extremely bullish on a deeper pullback. Now, sure, just like everybody else who's tired of watching the market go down for 4 weeks, I love to see prices continue to move up. It's kind of difficult from a technical standpoint. When you start looking at your indicators and you realize, the different things that would hold price or stop price from moving up, I can't help but to notice several different things. Like, for example, we're on a daily. Notice that the daily cloud is right here, which means resistance. That's why we have the resistance level here. We also have a lot of drop base drops or inside and down formations up above. That's not anything that's uncommon. I mean, when prices move down, they create these areas of pivots that create the formations that I teach you. Okay. And so that's all we're doing is identifying those type of levels right here to the left, up and to the left. Okay. So just know it's not very easy to continue to move up. It's usually, as they say, stairs to the upside, elevator to the downside. The question is, will this hold? And really, at the end of the day, as I said before, on the higher time frames, it's really important to continue to understand that if these prices cannot sustain above here, we could continue to move down. Refer back to the SPY chart as well. Okay. On a 4 hour, this is what we have right here. What I'm doing is taking this candle that we created this last week, which is an inside candle. I'm creating a demand zone. Okay. And I need to take this off. All right. This is a 4 hour. Let's go ahead and I'm going to edit this property. Boom. And just go like that. So this is a 4 hour zone, and so is this. And you can see price came down into here. We created the inside and up formation. We got a couple turn signals, which have turned into a really nice rally, but we do have the 4 hour zone that's up above. And you guys know after our class that we taught last Saturday how to approach these zones. Notice while we're sitting here that the candles are going from red to white. That means that, finally we're starting to get some sort of push to the upside. Your EMA cloud is starting to turn up a little bit, so therefore we get the change of color here in the candles, and white means neutral here in the trendy room. Okay, let's go ahead and move into the NASDAQ futures. We're using the NQH25. Let's take a look there, and let's get over to the weekly. Same thing. Okay, what I've done over here is created the zone. Refer back to Saturday's class if you don't know how I made it. It's pretty straightforward. We had the drop, the inside candle, and the rally candle here. And again, from last week, I made the zone a little bit smaller just in case we decide to pull back. Notice on this one as well, if I'm anchoring the Fibonacci's from here to here, the 23.6 and 38.2 are here. Bulls need above the 38.2. I mean, the first thing that you need is at least get above the 23.6. The 23.6 is also confluent with the trendy mid edge that is right here. Two levels that are there's synergy there for a resistance level, if you will. And notice up here, just like on the ES futures, the bottom of the cloud is confluent with the 38.2. It's not going to be easy. It would have to be like a really, really big catalyst in the market for prices to break above there. If we're approaching these levels lethargic, like a slow, slow move, then I would feel even more open to shorting these levels from an intraday perspective. If we get a big catalyst that's different, say some kind of ceasefire or something like that, and boom, we just break through, that is also possible. Okay. Anyways, these are the levels. Price is king. Let's go over here to the daily. The only difference from this level here, I could have made this zone wider. I went more with the less risk standpoint, and you could see that we just barely missed it, but that's okay. I think that, overall we're doing well here. We got the turn, we got a trendy turn on the daily, but just like the other charts on the daily, after the motivation that we did get on Friday, we are just basically coming up into resistance, and you guys can see that confluence up here. Remember, these triggers that I showed you on the ES and the NASDAQ are not blind triggers. We don't just go long or go short. I teach specifically how to approach those levels in the room. Let's go ahead and move on to the 4 hour. Same thing as the ES futures. You guys can see we went from red to white, so neutral. I went ahead and took this current candle here for the inside and up rally. The red to white, we got a turn signal, and there's a possibility we could move to the 4 hour. Now, in a market where the overall trend is red banners up here, and this is how you can tell what the trend is by using trendy methodology, we just take a quick glance up here. It's not great, right? It's not like the trend is all green banners. So you got to be really careful. We may not make it to these levels, but what I should be doing and what I teach is that if I'm long and we're getting close to resistance, we're being really careful and bringing stops up and taking trims a little bit faster than normal. Why? Because the overall trend in this case is red. Okay. All right, the next thing that I want to be looking at is we're going to come over here into Bitcoin. So I do trade Bitcoin and I just keep adding to it. It's a long-term position for me. So on the pullback, my focus has been the monthly. I did add last week at around 81 and some change. Very small, just small increments because I understand that price could come all the way back into the 40s by 30s. So again, just small levels. Overall, I wouldn't say it's a big position. It just, that's perspective depending. But the reason why I did that is because we came back to the green zone, we came back to the 9 EMA, and price did bounce a little bit. But when I'm sitting here long term, I really don't pay attention to this stuff. It's nice to see it, but it's not like I'm taking profits or anything like that. But just want to give you guys an update on that. And again, my focus is the monthly. This is a pretty big zone. And I also give you guys a level down here with less risk. So if you're not wanting to add yet and you're wondering where prices could go, 64 by 50, and then after that, 43 by 36. Okay. And I want to be careful. Again, small ads for me. My bigger ad would be, in the extreme levels. All right. And extreme to me is down here in the 40s and 30s. All right. That's all I got for this week. Again, please don't forget to hit that like button. We'll see you, Melissa and I will see you tomorrow morning, 30 minutes before the market open. I hope you enjoyed this week's broad market analysis, and I hope it helps you into this coming week. Have a good one.